So, hey everyone, I'm George, head of Europe at LTP. With me is Amy Zhang, VP Sales APAC, a digital asset infrastructure provider, Fireblocks. Since joining Fireblocks in 2020, Amy has helped grow its APAC business exponentially and is responsible for establishing relationships with key partners within the industry. Prior to Fireblocks, Amy plied her trade with Nasdaq listed Diginex and Deutsche Bank. Providing execution services for institutional investors across cash equities, derivatives, and electronic trading. As a background, Fireblocks delivers a secure infrastructure for moving, storing, and issuing digital assets, having secured the transfer of over $6 trillion in digital assets to date, so pretty substantial. Fireblocks customers are some of the world's largest banks, consumer brands, gaming companies, fintech, startups, and enterprises who leverage the Fireblocks platform and network to create innovative products on the blockchain. From there, they manage their digital assets and operations. Some of the institutions leveraging Fireblocks expertise include BNY Mellon, BNP Paribas, ANZ Bank, Flipkart, Philip Capital, AsianX, Oasis, and more. We're pretty excited to have Amy join us here today on today's show. Welcome, Amy. I guess a brief introduction on yourself would be handy for the podcast.
For sure. Thanks for having me on. And what an introduction. I think they forgot to mention the LTP in terms of the customers who are using us today, but I'll make sure that you guys add that in for next time. So a bit about myself. I joined Fireblocks 4 years ago. At that time, we didn't really have an APAC business. We had maybe 2 customers regionally. I got connected to our CEO, and really our goal in that first year was to figure out if the playbook that made us relatively successful in US and Europe were going to be applicable regionally. And then we realized, yes, although there are similar customers, but I think very early on we realized a lot of the retail platforms that were based in Asia had really unique needs. We started building out a lot of our retail products, ability to manage millions of wallets at scale, building out our support staffs, and as well as some of the language requirements needed for us to be successful in the region. And kind of after year 1, we realized that the investment were needed. We started building a lot more either people on the ground, and our business really started growing in 2021, 2022. Today, now we've got about close to 380 clients in APAC. We've got about 80 people now in the region working and supporting our clients along with our global team. And it's been quite a tremendous journey, kind of growing from really servicing the crypto natives in their call it trading or retail platform use case, not all the way to some of the payments, banking, tokenization use case that we have to do today.
Perfect. I appreciate the impressive intro on Fireblocks and yourself. I guess to point out on our side, so what pain points would you say that Fireblocks solves for its customers, the main key ones that stand out?
Yeah, I mean, I think the very earlier days, security was kind of top of mind, right? And I think if you rewind ourselves back in, post CoinCheck hack 2018, and ultimately what contributed to the loss of assets, there were really 3 main attack vectors that we try to solve very early on. 1 ultimately is private key security. 2 and 3 is really around how do you prevent human error and internal fraud, right? And how do you make sure that the asset that you have in motion is also equally as secure as well? Because we realized the majority of the time, trading firms don't get hacked. They unfortunately lose assets either through improper operation processes or human error and accidents. So a lot of the earlier day products that Fireblocks had was really tailored around those type of attack vectors by building out things like Fireblocks Network, right, which is the ability for Fireblocks customers to connect to each other and send assets to each other without the need of entering deposit address. It is building out the policy engine, which allows you to get pretty granular to define how you want to govern the flows of your assets without hindering your day-to-day operations. We are, I think, the only provider that has a mobile first experience, meaning all the operational folks or traders have mobile devices which they can sign on the go wherever they are, which is super handy in a 24/7 business that we all operate in today. Plus, if you recall, the dirty word of COVID. So during that periods of time, nobody was getting access to their, HSM servers, and the traditional way of managing digital asset operations being solely attached to your, private internet on your computer. It's just like not a really scalable way to operate. So that was, what we really addressed early on. Since then, I would say the pain point have really evolved for the retail platforms is really around scalability, right? If you are either doing a Web3 NFT platform marketplace, or if you are trying to think about running a retail exchange, the stability, the uptime and availability of your platform is super important. And then the details around, well, how does your system actually show me what is happening? So what's really interesting for a lot of people who don't understand is like, if you're running a retail platform, some of your biggest like challenges operationally is when a transaction is not sending, and it does happen. It's a blockchain transaction, things happen, but your operational team needs to have like proper air handling from your wallet provider to advise the client on what's going on. So a lot of times the work that we've spent and built is really just allowing the operators and the businesses that are building on top of Fireblocks to have like real-time visibility into what is happening so that they can better triage and respond and manage and send to their customers. And the final point I would touch upon is really around just the newer use cases that came to market. So most notably around like tokenizations of, you know, real world assets, tokenizations of stablecoins, which we've seen a lot of companies are doing today. It is to really make that process easy, right? Because I think a lot of times people think that when they develop a blockchain solution, it's a lot of technical elements to it. It's a foreign way of interacting. So a lot of the stuff we do help them on pain point wise is to make that process relatively simple so that they can focus on other business and revenue generating opportunities out there.
Perfect. Yeah, very impressive. And I guess that's why Fireblocks is recently named in the Forbes 2024 Fintech 50 list. And even more impressive, one of the only 3 blockchain companies in the list. So congrats on those, and clearly doing something right. I guess, could you tell us a bit more about how Fireblocks differentiates itself from competitors? Like, how are you different from the other infrastructure and custody technology providers in the market?
Yeah, 100%. I think to start with, we are a pure tech provider, right? We're not a custodian. The customers ultimately have full controls over their assets. And because of that, we are able to work with the customers to allow them to build a lot of the usability and the security elements in terms of the product. Because we're not a custodian, we're not providing fiduciary duty to the customer. So for us to compete, we really have to get really good at building products so that the customer wants to use and interact, right? So from a differentiation perspective, you know, the elements around security, the elements around a product that enables efficiency and operational benefits for our clients are definitely things that have really differentiated ourselves to our peers. And another thing I will highlight is because we today have so many customers already, a lot of times they will tell us what to build next, right? So another area that, you know, we really do pride ourselves in is to work with the clients to design and build products that are usable across the whole industry. So to think back in where we started, we actually rolled out like DeFi, ability to connect the DeFi platforms before the DeFi summer in 2021. It was like early 2020. We were having people ability to connect to DeFi. Our clients were telling us it's gonna be super hot. And we built it. I gotta be honest, nobody used it, right? For the first like 3 months, people were like, the yields are so low. Why would I ever do this? So a lot of times we'll work with the clients to try to figure out the next new product we will roll out. You know, the next thing that we did were really around the ability for them to connect to different exchanges. We realized that, hey, a lot of exchanges want to be on top of Fireblocks. It is unsustainable for us to add each exchange at a time. Let's go and create an own schema EPS to add in themselves. You know, we're building stuff around like non-custodial wallets, right? If you look at last year where the industry was moving towards, people wanted to build and tailor their wallet experience. And in a world where people realize that wallets is the key to everything to get them access to the Web3 environment, a lot of people are building wallets and non-custodial wallets, so we rolled that out. And even arguably, like for banks, you know, we started using multi-party computation and as a choice to sign transactions, but now we also have a single key signing HSM solutions that, you know, financial institutions who needs that level of security or have those requirements can leverage what Fireblocks have as well. So I would say a lot of times when we think about what Fireblocks ultimately have built is we looked at what makes a wallet provider and look at the different stack of what makes a wallet provider, starting with how do you sign your transactions to then who can sign transactions, how does that get governed, and then where you can sign in, how you can connect to the various different ecosystem. We've now have modularized the Fireblocks platform so that customers can come on and kind of choose your own journey, right? We've got clients today who are choosing to use Fireblocks end-to-end stack, okay, from how they sign to where they send it to, solely based on Fireblocks network, connect all the DeFi platforms. But we've also got clients who maybe only use us for deploying smart contracts, right? They might use something else to manage their treasury, or use us to manage treasury, use something else to manage their smart contracts. We got clients who may only use us for single key signing HSMs, but wants to use all the governance and policies of Fireblocks that they love and appreciate, but they already have their own box to sign transactions in. So that kind of like approach, I feel like from a competitive standpoint and how we've always approached the way we build product is just that, right? Like we recognize that every customers, and we service a lot of them, all have unique needs. And the end goal for us is building that kind of platform which allows them to manage their digital asset operations on top. And whatever that is for them, we will modularize and adjust to it.
Yeah, perfect. No, yeah, you can clearly see like the key points and why Fireblocks is pretty dominant in the space that it's in, and why you guys have been around and dominate the market for that long. I guess you touched on the tokenization studio of Fireblocks, and to go on that, like as blockchain is being viewed as a new set of payment rails and as a natural evolution of today's payment infrastructure, it represents an evolution, one that is able to support increasingly digital, interconnected global economy that demands 24/7, 365 settlement, as we're aware. That evolution is happening as we speak, and stablecoins is what making that possible. What are some of the interesting use cases you guys see from Fireblocks' side for stablecoins being explored by your customers?
Oh, 100%. I mean, this is a really interesting statistics, right? So if you look at a year ago, and we measure ourselves by assets that are transferred by our customers. Okay, and you mentioned we've got 6 trillion they've done so far. Last year, around the same time, we were probably about 70-30 split between crypto assets and stablecoins. Most recently, we're now about 50-50, and this is done in US dollar terms, which is inclusive of the recent asset appreciations, right? So then you ask yourself, like, well, how do we get all of these stablecoin flows? Because generally you think that flow should be a byproduct of trading activities. So then we double clicked into like what our customers are doing. I would say recently we've onboarded close to now 130 something call it customers using stablecoins as a medium of payments. I think that's the best way to describe them. They're not PSPs, they're not solely payments companies, but they're different sets of customers that recognize that I want to take advantage of the immediate delivery of these assets, and then ultimately leverage the stablecoins that are available today to transfer value. So obviously the number one use case is still trading. It's probably the only use case, or the only assets in the world today you can move $100 million from you to me across border, across bank, instantaneously, depending on which chain you use, somewhat instantaneously within a reasonable amount of time, right? So that's still existent. But really what we're seeing now is people doing on and off ramps, right? We're seeing clients who've got the ability to receive fiat are converting different into stable coins for them to do transfers. We're seeing traditional industries, like, for example, commodities trading firms, FX import exporters. I mean, we've got clients who, are import exporting goods out of certain countries for like, just like, think like notebooks, papers, like stuff that you stationaries, right? And they're in one country and they're exporting to a different country, and they're preferring dealing to stable coins because it's faster, easier. And pretty much we're seeing a lot of importer exporters that are in need of quick turnaround of cash and working capital, leveraging stable coins as their preferred medium of settlement because it allows them to have that turnover much, much faster, as opposed to having money being stuck in certain banking rails for unknown periods of time. And if you're a sort of medium-sized businesses who maybe are not banked at a larger scale with borrows and all the other auxiliary capital market services provided to you on the transaction banking side, it's like a no-brainer for you to switch to an asset if the only reason why using this asset is for medium of settlement. So that's definitely a trend that we're seeing on the usage side. Obviously, I think a lot of the financial institutions as well as central banks are now really exploring the different permutations of what I consider money, right? Like either CBDCs, bank deposits, or stable coins, and they're all using kind of leverage blockchain to issue and mint the different assets. Some of them, they're looking at cross-border use case. Like, for example, for some of the Aussie banks we've done have been really around like that cross-border multi-currency use case and leveraging stablecoins to improve that flows. We've also have seen, in Brazil, looking at CBDC tokenized deposit use cases where you're wrapping CBDC in a tokenized deposit. Different permutations, I would say money is definitely being explored, and definitely a trend that we see will continue to grow because it's a use case that I just think that stablecoins definitely help solve.
Yeah, I totally agree. Especially when you look at the speed that you can, the speed, and I guess how cost effective it is to utilize these transfers and the cross bordering, etc. It blows everything out of the water in terms of and what it had in the traditional or competitive sense. But yeah, I agree. I see more and more of, especially as you mentioned, the on and off ramping, etc. You see more and more of the demand for this grow every day, and even on our side, we're constantly asked around. Questions around who can use, etc., and being able to provide that on and off ramping capabilities. So yeah, I think the use case for that is just growing exponentially. I agree. And I guess following on the suit of the tokenization topic, BlackRock launched their BUIDL build and its first tokenized fund issue on the Ethereum blockchain with Securitize as their transfer agent. So I guess. Could you tell us a bit more about how Fireblocks is working with Securitize?
Yeah, so we help them to provide the wallet infrastructure, which allows them to mint and burn the different assets, right? That they could use to help manage that. And then also, today, if you are a Fireblocks customer, you can use our wallets to hold BUIDL as an example, and connect to a Securitize. I believe via like a DeFi platform that could allow you to initiate a lot of the flows. So that's kind of how we help them. But I would say in general, this concept of a yield-bearing instrument that has a lot of the properties of call it fast movement is definitely a trend. More specifically, we're seeing clients looking to find and converting their stablecoins into a yield-bearing instrument to use as collateral for their trading activities, right? So let's say right now, if I have $100 million worth of USDC, I leave it on an exchange, I'm a market maker, the USDC doesn't really move a lot from my perspective, right? And also we're seeing there's two trends really happening. One is the trend of people willing, and the exchange and the customers post FTX, figuring out a way to keep clients' collateral in a more segregated off-exchange venue, right, which we've got products for. And the second trend is then customers demanding or seeking a way to capture some of the yields that the underlying assets should be able to accrue like they would in a traditional finance environment, right? So combining the two together, we're seeing people having like a way for you to effectively have buying products like BUIDL and use that product as collateral by working with liquidity venues who recognize that as collateral. And then from a trader's perspective, that's more benefits. The asset sits in the traditional custodian, and from a yield enhancement perspective, like right now when I use USDC or USDT, I don't get anything. Right. So that's definitely a trend that we're seeing that, call it tokenized assets and tokenized assets exchanges and the licensed venues merging together with traditional crypto businesses and trying to capture both sides of the world, the best of both worlds in terms of having the speed and liquidity that comes with these stable coins, but also then have the way for them to convert into a yield bearing asset when they can.
Yeah, again, following, I guess, on the trend side of things, but this is another thing that there is just our sort of market seems to have gone crazy for at the moment. The tokenization of real world assets and these sort of companies all looking to see where and when they cannot capitalize on this trend. Like you said, you got BUIDL that represents a significant development for the tokenization of real world assets on public blockchains. So yeah, I guess what do you see? Probably more of an opinion also, or what do you see the future holding for the tokenization of real world assets? Like use cases, what use cases does tokenization serve to benefit in particular?
Yeah, I mean, I think so let's start with the fact that the tokenized version of whatever the real world asset is has to be probably 10 times better than the original version in order to get adoption, right? I think I forgot where the quote comes from, where people talked about the difference between like new technology for adoption versus existing technology. And the end conclusion is like the newer technology needs to give the user 10 times more benefits in order for people to have full conversion. So in the same way, if you think about what would make sense to be tokenized, whatever the version that is available needs to be, 10 times better than the underlying, right? So if you look at why people really jumped on this whole idea of tokenized US Treasury, is because today you've got an ecosystem that exists in the crypto trading ecosystem, and largely speaking, there's no yield natively existing within the infrastructure, right? Like all the assets are non-really yield generated base from a base level. The borrowing and lending in the last few years have really dried down. Nobody has got tons of balance sheet they can use to lend. So like all the traditional route of capital markets functionality doesn't really exist in our industry per se, besides just like trading. So then if you look at what does tokenized real world asset for a US Treasury could mean, is the fact that you can take advantage of things moving faster, but also get some yield. So that's like, I think an argument could be said, it could be much better. The other area that we are seeing in terms of real world assets being done is, we're seeing people getting access to these like, there is some fractionalized ownership use cases that's getting some adoption, where people are realizing that, hey, like the average ticket size for, let's say, a private wealth bank might be, 300K per asset. Okay. You're still a professional investor, but because the way the private wealth bank is operating and their overhead of operations, the minimal allocation for that segment might be quite high. So then can they do something that allow them to improve that net flow to get better access to a certain set of liquidity? We're seeing funds being tokenized, same problem statement. The reason why like international funds sometimes funds struggle to raise internationally is because the distribution channel is quite expensive for them to operate, right? So we're seeing fund managers now coming out to different tokenized platforms for them to get access to different liquidity across border with the right license and the support on the business development side and the fundraising side. So those things we're definitely seeing happening in terms of real world assets. And I would say that another avenue, again, moving away from real world financial assets, right? We're talking about like real world assets in general, is really the trends around like Web3 and tokenized NFTs and collectibles. And we're seeing a ton of use cases being done on like token gating experiences, and people really thinking about like ways that they can digitize something like access, like certain things to allow a better experience. So that's definitely another area that we're seeing on the real world side, and specifically in Asia, like Japan and Korea is really growing in that segment. And the final piece that I'll wrap up is really around purpose-bound money. Right, that's something that's a very hot topic in Singapore. It's not only just tokenizing stablecoins, but figuring out a way to pre-code what these assets could do and allow that distribution to happen. So those are kind of the things we're seeing now.
Yeah, perfect. No, a great summary of the use cases and sort of the trends that we're seeing in those real world assets, and touching on the definitely touching on the different asset classes. I recently spoke to a PBO1, Max Burnham, who's just created around the digitalization of the T-bills, etc. And it's again sort of similar to what you're saying, and then seeing a gap in the market, and where I think he tried to buy a tranche of them, but it struggled with the broker, and then obviously that's where he sort of created this idea. Yeah, so it's definitely something that's an industry part of our industry that's just taken off. I guess reverting back to Fireblocks, I guess could you tell us a bit more around? I know in September you expanded Fireblocks expanded its industry-leading wallet as a service solution with the launch of its non-custodial WaaS offering built for brands, corporates, fintechs, and the rest of the clients that you guys are servicing. So securing, I think, over 200 million wallets with some of the world's biggest Web3 fintech brands, etc. So I guess tell us a bit more about that offering, how it's different from direct custody wallets, and give people a bit of a clearer image on that.
Sure. I mean, I think the branding and the naming of this is constantly changing because I think the industry itself is trying to understand what does this mean, right? So maybe I can take a step back. What we very quickly realized was, not us, actually, we didn't realize this. What the brands and kind of the Web2 company realized was, in order for them to or allow their customer to get access to the Web3 world, somewhere along the way, somebody is providing a wallet for these users to interact with these different Web3 platforms. In fact, the first sets of customers that realized this were the traditional crypto exchanges. So towards, I think, tail end of like 2022 or mid 2022, you notice that a lot of these crypto exchanges launched a, call it Web3 wallet, non-custodial wallet, because ultimately what they realized was for them to curate DeFi pools for each of their customers, it was like very exhausting. There's a lot of pools out there. It's not a good experience. What they'd rather do is provide them the wallets to allow their customers to connect to any DeFi pools of their choosing. And from that perspective, they can still maintain the user experience, right? Like the customer still using whatever exchanges branded wallet, so they stay connected to that customer relationships. They still have that brand recognition, but they don't have to curate these things anymore. Now, of course, you can get into a little even more detail to say, like, is there a way for me to building mechanism to get revenue on the back of this? But the main goal for them was really around, like, how do we maintain the customer experience? I know that our customers are using MetaMask or Gnosis or whatever retail wallets out there. It's connected to DeFi platforms. I'm not seeing any of the flows. Okay, so that was like a really interesting point that we actually saw. And then since then, a lot of these Web2 companies also made the same realization. So that includes, you know, the telco companies, it includes the phone hardware makers, e-commerce platforms, pretty much anybody who today business is based on direct B2C user customer connections, realize that if I want to go and think about a Web3 world, I need to figure out how to build a wallet. Hence the start of non-custodial wallets, because ultimately these platforms are not custodians. They don't want to be responsible for the customer's assets, but they want to give them the same and curate the experience so that customers could connect to the Web3 world. However, even though these platforms are not custodians, they still have obligations, right? They're still businesses. They still have to figure out how to avoid OFAC sanctions and all the things that a normal retail business needs to think about, especially, you know, as they go in day to day. And that's kind of how we started building our non-custodial wallets. We designed a way for businesses to deploy wallets for their end customers. We figured out a way to allow them to help with the recovery process, because from a wallet's perspective, their end users might be quite new to this space, and you don't want to give them a wallet and make them manage all the backup keys and the seeds, and ultimately there's no way for them to like recover their assets in a really easy way. So we built a lot of those solutions for them. It is integrated into your existing KYT AML solutions that you would have, also to the non-custodial wallets as well. What does that mean? Like, you know, when assets come in, you still have to be able to screen these assets, and then when something is flagged as like from a nefarious origin or it's going to a nefarious destination, the business themselves can effectively flag to the customer and say, like, you need to move this wallet off my platform, so they can meet their obligations as a normal business that's following an AML rules, right? So all of those things we built in for the customers, and since then, you know, we've onboarded many customers in that space. A lot of the US corporates are leveraging us now for non-custodial wallets, as well as with a few Web3 companies that are based in Asia that could be using us a combination of both custodial and non-custodial way.
Perfect. I guess these, being obviously the infrastructure tech provider that you guys are, I guess these products are sort of reactive of what you get and feedback from the market and the demands from different corporates, different entities, and different people that you're servicing. I guess to obviously just detail on there, like the requirements that you hear most that the corporates consider when choosing to work with a company like Fireblocks. So when it comes to them to making their decisions, what are the requirements you normally hear from these guys?
I mean, when it comes to non-custodial wallets, it really depends on the sophistication of the team that's building it, right? So I give you, and the use case that they are trying to explore. So some of our clients, let's say e-commerce platform, right, already have like a mobile application with a checkout experience, meaning that they can go and connect credit cards, swipe, and do purchases. Okay, so then really all they need to do is just like a wallet that is directly embedded into their application, allow the customers to store their own digital assets. So their requirement is quite simple: just be like, can I deploy the wallet? Can I make it secure? And can I make it efficient? But other times you've got clients who maybe have a web-only experience, and they want to go then turn their web-only experience into a mobile experience, like building an app. And then in those instances, they not only just need wallets, and you figure out like, well, who's going to go and do my credit card checkouts? How can I do one click? Like they're looking for more like a widget style experience they can deploy very easily into their application versus adding a piece of functionality into the existing app. So depending upon these like retail platforms or brands and like what they already have, they may need different things. So this is why like sometimes clients will go with us direct. Other times they will work with the partners like Crossment, which also built for a lot of, they're built like Crossment is built on top of Fireblocks, but they build a lot of the ancillary services needed for you to deploy and embedded wallets. So like it really depends on like how sophisticated the customer is and how much of that experience do they want to fully tailor when they go in and service their own customers.
Yeah, nice. And then I guess you talk of, you mentioned sort of like seamlessly embedding the wallets and a couple of e-commerce companies and the sophistication of those customers, depending on what the requirements would be. I guess it was probably worth mentioning that Flipkart is someone that recently partnered with you guys, and for talking of sophistication, with over 500 million users, and they partner with you guys to seamlessly embed the wallets in the background of their mobile app. So I guess with Fireblocks having created X amount of million wallets for Flipkart, could you tell us maybe some of the challenges that Flipkart were facing and how Fireblocks would sort of found the solution and address them, I guess?
100%. I mean, they started with, they wanted to have some wallets, and by the way, they're not using us for non-custodial. They're actually using for custodial wallets, right? And the decision ultimately comes down to is the platform's choice. But on their end, the challenge is like, well, how do I deploy tons of wallets at scale? And as a brand, they have to think about not just like security per se of the assets, but more like brand reputation security. So, and then the end experience that the customers will have when they're interacting with a solution to make sure that it's a really good one, so they continue to use the product, right? So our growth story with them actually, like I think we first did a campaign with them, and it was maybe like 30,000 wallets that were created, and it was they were partnering with a phone provider, and they airdropped a bunch of NFTs to the end users who wanted to go and buy these phones to give them a discount. The user took the NFTs, received the discounts, and I think they had something like a purchase rate of like 80% or something. I forgot the exact numbers, but it's a good experience. They're like, okay, this is great. Let's go and try something else. So they did like a second campaign where it was more for Women's Day sales. And then there was another campaign what they did later on. So what we really learned with these like brands is they may start on a single campaign that's very like marketing driven. That could be a specific use case for them. And they will continue to explore different use cases across. And then, as a platform provider, like our job is just to make sure that we can sustain their usage and the availability. And then today, now they're using us to manage tons of wallets. So a lot of things really just around making sure the uptime is there, making sure that they get the same scalability. But the good news is, a lot of the Fireblocks, well, not a lot, the Fireblocks solution has been really battle tested in supporting our crypto trading clients. So a lot of the infrastructure that we already have that is used to manage, $1 trillion worth of product can now also be applied to these Web3 businesses. So that gives them not only assurance, but to know that like all the money that is being accumulated and also reinvesting back into our business will allow the platform to be, serve them for a long term as well.
No, that's great. No, I guess it shows a character to you guys in terms of the scalability that you guys have in the size of the client that you're using, and being able to solve those problems. Obviously, it's a given the size of the client is going to come with more challenges and probably a bit more demand around the product that they desire on the endpoint. But so I guess it's credit to you guys at the end of the day, and in terms of being able to service these clients, and that's why we're here.
I would say actually it's probably credit to you, right? To the guys of LTP. I always say this to our clients, right? Like they compare, especially when it comes to like NCW or like Web3 specific wallet use cases. There's a lot of like Web3, call it startups and wallet providers that are really solely focused on building NFT wallets and things like that. And I always describe that the difference between the stuff that we used to secure and the stuff that like these players used to secure is different level, because when like you use Fireblocks to manage your Bitcoin, Ethereum, and these are like highly liquid, highly valuable, real tradable assets, which means that the attack vectors that we face and the actors that we have to protect our clients against is a very different level than people who are storing JPEGs, right? Like nobody is going to come to steal an access to a application, right? Like, or an NFT of some sort, if there's no like easily sellable value, because attackers are business people, right? They will look at how much money the stuff they're trying to steal is worth, and they'll decide if it's worth their time, and they'll go and try it. And if it doesn't work, they'll go to the next door, right? So this is how like typical hackers work. So we always talked about like why a lot of the learnings that we've had in dealing with high valued crypto assets and dealing with blockchain assets really help us in this Web3 space. And as this industry evolves and people realize that platform availability and platform experience is going to be super critical to how they deliver their end user experience. Hopefully they will recognize that a lot of the product Fireblocks build will be very suitable for that.
Yeah, 100%. And then obviously Fireblocks and these, one of the biggest things in our industry is obviously the counterparty risk. And I feel like after recent events, this is something that is probably on the highest on the desire list for our clients, that stability and security, and sort of making the client comfortable in terms of eliminating that exchange counterparty risk. And so I guess you guys probably brought you to the product of launching your off exchange to eliminate that counterparty risk, and because it obviously can take various forms, including the cyber hacks, bankruptcy, and commingled accounts, and the misappropriation of client funds, as evidenced by FTX incidents. So I guess for the people watching, I guess explain how off exchange is a better option than the custodial services, and what brought you guys to sort of launch that product.
Yeah. I hope you guys are ready for a story, because this is going to be a fun one. And the reason why I say this is because I think, let's start with, how should an exchange think about customer deposits, right? And I think in the crypto world, if you ask the crypto exchange, 5 years ago, you constantly hear that they think that customer deposit is so important, right? Because an exchange needs a lot of customer deposit to help manage liquidity of the exchange and so on and so forth. But actually, if you think from the exchange perspective, a customers could deposit $100 onto your platform. If they don't trade, that $100 is two things: the cost basis to you to maintain, to store, and it's a liability because you have to make sure you give it back to the customers later, right? Like, so in the traditional sense, if you were running an exchange, actually you shouldn't want any custody of assets on your platform. Your sole job is to match, right? Your sole job is to provide liquidity, but your job is not to hold these assets. So that narrative coming into traditional finance world, where I'm from and many of the people in the industry from, it's like a no-brainer, right? It's not because segregation of duties, not segregation of control. It's just even purely for economical fact and what an exchange is supposed to do, and how depositing assets to the platform doesn't really make you any money. So we think, right? And before the fraud and all the stuff happened, it made a lot of sense. So then back in 2020, when I joined Fireblocks, and we started talking about the subject at that time, and I'll say this off-exchange product, we're already in its nascency. We had different solutions available. We actually worked with different lending platforms to kind of have this like locking mechanism that allows you to keep a collateral in a mutually managed wallet between the lender and the borrower to help mitigate this. And obviously we pitched the same product, it was like 2021 to all the different exchanges. But obviously at that time, exchanges making too much money and nobody really cared, right? As usual, the clients were all shouting for it. You ask every single trader, any asset manager, they obviously wanted it. They knew the exchange risk, but they all really had to like effectively deal with it. And the way they dealt with it was, well, I will only keep X amount of percentage of my asset and exchange at a given point in time, and spread across different venues, right? And the FTX event really changed the industry's narrative, because if it could happen to them and in such a wide scale way, the clients are so prudent now against how they think about exchange counterparty risk, both in terms of how they secure their assets, how they mitigate the different segregation control, on all these nuances. So then post FTX, the exchanges then became open to have discussions with clients to think about these products, right? To think about, well, is there a way for a customer to leave assets in a vault or a wallet, and the exchange give them immediate trading credit on the platform? And the only time this asset that's locked in that vault will only need to be moved is under two scenarios. Either the exchange is claiming that you need to go and sweep away these assets to me because you 100x and then lost all the money and now the collateral is on the exchange, or the customers effectively wants to top up the P&L that they've earned on the exchange to bring it back into their own wallet. So that's in essence like what we build. But obviously, unlike other custodians who has the ability to hold assets for both the customer and the exchange, we obviously approached it using technology. Okay, so effectively, customers of Fireblocks are holding their own assets in their own wallet. They're not taking that like a fiduciary risk to Fireblocks because we can't move assets on behalf of them. They will allocate these assets into a we'll call it collateralized vault account. And then when they do, the exchanges that are on our platform will give them immediate dollar for dollar or one-to-one trading credit on their trading account. Then they go and trade and do whatever, right? And then when periodically a settlement will be triggered, and then that could be triggered on both parties. And if the customers wants to go and unlock the asset that is in their CVA, we will send an instruction to the exchange. The exchange will check that against their available balance. And they'll be like, yes or no, they can unlock, right? Vice versa, if the exchange needs assets from the customer because they need that collateral to settle their obligations, the customer will say yes or no. And then there's the whole entire details of like triage processes, what happens if there's a dispute, and so on and so forth. But ultimately, the way we approached is, we don't want to replace counterparty risk from an exchange to a custodian. We want to improve the ability for customers and the exchange to connect with each other, but just kind of like have a pre-agreed settlement instruction that we will code into their policy governance tools so that they could automate a lot of the settlement needs on both ends and triage different situations. So that's really like how we started building this product. We now have gone live with Deribit. We now also have customers who are interacting with both HTX and Bybit as well. And we've got a bunch of other exchanges that we're looking to add. And we would love for any exchange that wants to work with us, both as an exchange that wants to supply liquidity or any other funds or asset manager that wants to use our product to engage with these different exchanges. We would love to speak to them and find ways to improve our product there.
Yep, great story. So you wasn't lying at the start. It's a great story.
Like when I told you that, when I'm telling you that we call these exchanges, and they literally just told me that, no thanks, Amy, I'm not interested in this. I'm not saying with hyperbole,
Yeah, they had to wait for something to kick them at the backside, basically, something to go wrong for them to then take action. But obviously we got there in the end, and I felt like, especially post that sort of that episode of the industry, then I feel like the most important thing was definitely eliminating as much counterparty risk as we could for the clients, and regaining that trust and comfortability with the client, which would then lead to obviously scaling everyone back up. And it's probably led on to, like you mentioned, the one-to-one mirroring and being able to cold store and actually still then utilize the trading platform and still being able to make profits and that your strategy is deployed, etc. Being able to do that is probably the biggest benefit that we've seen come out of sort of that episode.
100%. And it starts. So the way I think about it is, these type of product is the foundation of building the next phase of, call it the crypto capital markets, which effectively is the way to cross margin. Right? Because today the liquidity is really fragmented across multiple exchange venues. And I can tell you for a fact, the exchanges themselves are never going to come to an agreement where they get into some sort of like, like a London stock exchange model where they can all agree to pipe into a liquidity, agree to a settlement, collateral agency. Like, that's not going to happen, right? But more likely or not, someone is going to come in and provide the right amount of balance sheet to allow that kind of connectivity across different venues, and effectively provide balance sheet margin and liquidity. And this product is like the base for people to start doing this process in an efficient way, and hopefully get us to a world where capitals can be used much more efficiently across these different venues, right? And ultimately drive more trading and more liquidity for the broader market. And I think we're moving to that direction, and hopefully I would suspect that 10 years, not even 10 years, that's too many years, 5 years from now, like a lot of what we see in terms of risk management and control in the traditional market, you'll see applied in digital asset, but it should be done in a much better way because the asset is much more liquid, much more volatile, and it's 24/7. So like our demand for infrastructure and settlement is like so much higher than the way the traditional market is going to be able to handle. So I think we'll take a lot of the principles in traditional market on risk management and then use technology to help apply into our world.
Yeah, and being a tech market as a whole, you'd think that this is something that the capabilities are there. And like you said, they'll take the core principles that we've seen and that have been generated over the last 20, 30, 40, 50 years, etc. And see that and adapt it into our world. And yeah, like you said, create these products that are so desired from the underlying clients that we deal with every day. But I agree as well, like, well, we hope and I agree, but it'll be shorter than the 10 years because what we see nowadays and with everything, even away from sort of what we're talking on the topic is now with the ETFs and these bigger players and institutions getting involved, and you feel like there's a bit of a snowball effect now, and these things could really take off in the next even 2 years. We'll see drastic changes in our market with the adaptation and the institutionalization, etc. So yeah, I think we could definitely see something progress quickly in terms of that.
100%.
I guess on the off exchange service that you've given a good background on, I guess how do you see that for our customers, for LTPs, institutional clients? How do you see that enhancing security for those, and particularly dealing with major exchanges like your HTX and Deribit?
I mean, I think a few things, right? One is when they are trading through LTP as a prime broker, when LTP has that connection to the various different exchange venues, that's just better risk for the end customers, right? They are now, appreciating your effectively connectivity and your checks and balances from their endpoint. Their assets are safer, their assets more secure, and ideally, as LTP build additional product on top, hopefully you get better liquidity in that way as well, and finding ways for them to have, ultimately have better execution and better price. So I think for your end customer, that's definitely an avenue that could work. On the flip side, there's something, I don't know if I'm like, spilling any secret beans here, but the reverse could also happen, right? Like LTP could also be a liquidity venue in the same way that an exchange is for LTP, and then the institutional customer can use a Fireblocks wallet and also connect to LTP the same way as well. The same concept, right? It's like, do I want to, like, it's the same concept of, do I have to leave my assets at a venue in their control in order for me to trade there? So there's all these different permutations of product that could be launched down the road, and maybe for spot trading that's applicable due to the pre-funding nature of it. But as industry get into more like structured products and getting all these like traded derivatives and all of these things, I can also see that the other end of, call it the off exchange, you could call it off prime broker or off liquidity venue, whatever you want to call it, the other side could move away from just a centralized exchange, but maybe other counterparties. In the same way this product like initially was designed also for a lending desk and counterparties that wants to figure out a way to manage collaterals, I can see this like locking mechanism, which effectively, I think, is a way, in the traditional term, it's a way to digitize an ISDA, right? It's like an agreement of how people want to settle, and then you can agree what that is, and then you can put it on the code, and you can deploy it using Fireblocks, and the two parties can agree how they want to settle. Okay, so that's like, in essence, what we're trying to build. So they can be applicable to so many places. And for LTP customers, I would say that maybe, in the future, that they could think about maybe connecting LTP this way as well.
Yeah, I guess, and you put it in the simplest form there. It's no point making it more complicated than it is. It's these two parties and how do they want to settle and how we're going to create that settlement and how that matching, etc. So sometimes it doesn't need complicating. And I guess this also it comes into, we touched on earlier with you have the custody of assets and people being able to store and cold store. And this is where the digitalization of like the T-bonds may come into more into play when people don't want to just leave my USDT sitting there in a cold wallet, etc. They want to maybe have the ability to partner with these companies that, okay, I can get 5% yield on my cold stored assets that are now sitting in a T-bill, which are deemingly safe. So this is where we might see the adaptation with the PVO1 and the likes of those guys. So again, another interesting point that sort of may all sort of mold into one and sort of that life cycle of the asset and the storing the asset, etc.
Yeah, 100%.
I guess on being APAC based and us being APAC an APAC founded company, how did you see or maybe some insights on how LTP and Fireblocks initially come together? I'm guessing you've met the team over in APAC and sort of the key factors that led to this collaboration, I guess.
Yeah. So I would say that for us, our goal, Fireblocks is not an Asia-based company. Well, we're not an Asia-founded company, right? But my goal and the team's goal here have always been to deliver an experience for our customer that is as closely to an Asia-based company as possibly can, right? And it started with us building out language expertise, and actually Mandarin is the first language that we supported. Like I speak Mandarin, our whole team pretty much speaks Mandarin. So we started now servicing client end-to-end, all in their local language, and make sure they have the same and really great experience in their engaging with us. And I'm not saying that's why like LTP or Jack worked with us by no means, but I think that, you know, that definitely helps, right? And I would say from a product perspective, yeah, it's like, you know, I think we first started initially talking about like ways to lock in assets in a workspace to help you to get more institutional flows. So a lot of, I would say, the ways that we worked with LTP has been just listening to like your requirements and figuring out what exactly you guys needed your wallet provider to enable. And we try to go and figure out a solution for you that would align to your day-to-day operations. And that's really, you know, how we've done that. And I would say regionally as a company, we would do that for all of our customers. We want to service them and speak to them in language that they feel most comfortable in. And then we want to deliver an experience that allow them to be in time zone, to be highly responsive, and just like make sure that they feel the same way as if they were working for a local founded company.
Perfect. Yeah, no, I agree on that side of things, and we've definitely seen a great partnership with us and Fireblocks, not just obviously in our APAC regions, with myself now over on the EMEA side of things, and we look forward to it. But I guess obviously with yourself being over in Singapore, etc., I know you're quite happy to be back there now, as you touched on off camera, and you've been traveling a lot, and you're happy to maybe just be home for a little bit. And I guess what are your plans? What are the main sort of plans now for Fireblocks in the APAC regions for the next for the rest of 2024 race?
Yeah, I mean, I hope our competitors aren't listening to this. I'm giving all my secret sauce away. No, I'm kidding.
Yeah, maybe keep it limited.
Yeah, exactly. It's more, I would say it's a goal for us to continue to penetrate into our core markets in region, and then get us into emerging markets where we have not been before, right? I think the challenge as any company when they start building out an APAC operations is like your low hanging fruit is always the English speaking countries, right? Once you figure that out, then the real opportunity sits in the emergent countries, which will require you to have the resources, the focus, and the drive to build out a dedicated service team. So for me, I go on and on about like, I want my customers to be serviced the same language that they speak. You know, everybody works at APAC office multilingual, right? Like we need to figure out a way to get talents that obviously can speak English, because obviously our main product and our corporate and speak in English, but be able to communicate to our clients regionally on the ground. So that's definitely a very strong focus for us, and to make sure that we're, you know, servicing our clients very, very closely. And the other area I would say is another focus for us is, actually you alluded to it earlier, is like building that connectivity from abroad to region and region to abroad, right? So we have a lot of APAC customers today who now have relocated into other parts of the world that Fireblocks have also strong presence in. So it's making sure that they are connected when they do want to build out, for example, a business out of Dubai. I'll make sure that, you know, my counterparts in Dubai are connected with them, and they're introducing to our Fireblocks local community of customers, and we can work with them. Similarly for London, as well in the US, right? So that's a big part of our goal for our clients on the ground, because we do see this trend of our APAC founded businesses expanding internationally. So we want to help them to do that successfully, and also work with the local folks that we already have strong connections in, to help them to build out their business on the ground in the country they want to go into, and vice versa, right? Like APAC now has become the super hub as well for a lot of activity. So, you know, during Token 2049, a lot of people travel from out of town. We want to make sure we do the same for them as well.
Yeah, it's definitely becoming a massive driving factor in sort of our industry, especially with what's going on the other side of the world, and sort of leaving that there up for grabs really, in terms of where the driving force is going to be, where the hub is going to be. It's definitely somewhere that's taken off more so in the last few years than and sort of as the front runner in our industry. I guess sort of what are some of the key developments you see in the APAC regions now, and sort of you touch on maybe. Obviously, including the rest of the world, but you touched on like you see companies now expanding and moving out of the APAC regions and maybe setting up hubs elsewhere. But what are some of the key developments you might see?
Yeah, so there's so many. It's like, let's maybe go like country by country, right? So I think regulation, without going into details, is a huge part of it. Why is that? I would say, let's give an example. You look at Japan and Korea, you can see a high correlation between when Japan were able to list multiple assets more away from their core to that expansion of their trading volume. Korea also is, the retail is back, right? I think the other day I was looking at this, in US dollar terms, like the Korean exchanges is like one of the highest trading volumes in general. So they got domestic growth, but in Korea there is changes happening in July on legislation, right? Hopefully with the start of ETFs, there are countries and like Korea is a good example where institutions are not to touch any digital asset, for example, but there's a very strong trading needs. So a Korean stock exchange ETF could be huge for that market, right? Think about how much like retail trading is already happening, a lot of adoption, but historically the institutions were not allowed to touch any digital assets. So that could be an interesting development that will happen in the near future. And actually, in general, that ETF trend across different jurisdictions is definitely something we're seeing now. We've seen the launch of ETFs in Australia. We've seen launch in Thailand, Hong Kong. I think that will continue to give more avenue for people to access to digital assets. So I think that's great. I would say other areas that is really building out is kind of in Asia. And I think this is really unique to Asia, where large corporates are really putting significant amount of capital in making Web3 a core part of their strategy. Talk about like, the telcos, the e-commerce platforms who are really putting money to work. And we're seeing that being built regionally. And because people in Asia are really comfortable with like digital finance, people comfortable mobile-based experiences, there's this really strong correlation between how that's developing and what's being adopted regionally on the ground. And I would say the other avenue that is happening is really just around the trading side, right? Like to your point, earlier, this need for traders to get better access to collateral or different form of collateral is being driven out of Asia. All the larger exchanges today are Asia based, right? So there's going to be a lot of, I think, call it innovation that will come out of these firms.
I guess seeing that being at Fireblocks, you get to really see the sort of that adaptation across the whole of the market outside of just maybe on my side, just the trading, just your market makers, your hedge funds, etc. You guys get a real broad aspect of your e-commerce platforms, your gaming tech companies, etc., etc. Like really like a broad aspect of the whole market, which is pretty interesting to hear about and sort of sit on this interview with you. And I guess just sort of, I know I'm conscious of time, and I understand it's a bit later your side than it is my side. It's the start of the day for me, but what's exciting you most? I guess what's going to excite you most, and what has excited you most coming up now in the digital asset space?
Yeah, I mean, this cycle is really strange, right? You asked me this question last week. I was like jumping up and down over these like, liquid restaking, like the eigenlayer stuff and the bearer chains of the world. I was like super excited because I feel like that was like going to be this cycle's versions of whatever the DeFi summer happened last summer. The last cycle, but this cycle, I think the difference is like things just come and go much faster. I think that's something that people have to recognize that's really different is the underlying current, I would say, in this cycle is institutional adoption, and more specifically institutional adoption to our asset class in a form that they can digest, right? So ETF is one version of it, tokenized deposit, real world assets, US Treasury is another form of that kind of like avenue. So that's like the underlying current of net flows coming in, people finding better distribution channels for these things. But then the crypto native side is still, I think, the strive and hunt for this like yield-based product. And this cycle, the only difference I would say is on this side, the yield-based stuff that's come in and go much, much faster than, last cycle. So something to kind of keep a watch out for, and definitely a really great trading opportunity for folks to get involved in. And the final piece I would say I'm most excited about is like tying back to, what I think this asset could be used for is all the payments use cases, right? It's the fact that, there are phishing boats in Hong Kong that are exporters, right? And the seafood restaurants in Hong Kong buying and paying with a stablecoin, like stuff like that is really happening, and I feel like that change in people's perception of what digital asset could be used for will play out this cycle, and I'm here for it. So
Yeah, we're definitely here for that. The sort of the bringing it to the mainstream, the masses, etc., and those more the payment real world use cases is definitely something that excites all of us, I guess, and brings it in. But
Hmm.
no, I thank you for your time, Amy. It was a pleasure sitting down with you. You made my experience a lot more easier. But it was a pleasure
Great.
to sort of run through and get more in-depth questions and detailed about Fireblocks and sort of hear about what you guys have planned. It's a pleasure.
Happy to chat. Thank you for having me. Talk soon.
Perfect. Thanks, Amy.
Bye.
Bye.